Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 16th at about 1:30 p.m. Eastern. Well, the New York Fed's in-house economic forecasting model is predicting a notably brighter economic future for the U.S. relative to 3 months ago, the bank said this morning. The model now sees U.S. growth rising by 1% this year, up from a 0.2% projection in March. And on that cheerful note, we'll go on to look at 3 charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. And we always keep an eye on it because in a bullish market like we're having now, 3 out of 5 stocks will follow it higher, and in a bearish market, which we hope not to see again real soon, 4 out of 5 stocks will follow it lower. So this is kind of our beacon that we keep an eye on. And again, it's a daily chart. Now today when I captured this chart, the SPY was trading at $441.33, or about $44.13 on the S&P 500 itself. Now, of course, I was curious to know where the all-time high was, and it was in January of 2022 at $479.98. So we can round that off to 480 and kind of keep that in mind as we watch the SPY hopefully continue to climb, at least in a general sense. So at the moment, we're only about 40 points from that all-time high at about 480. Now, excuse me, it moved up, the SPY moved up yesterday, which was Thursday of this week, to an intraday high at 443.90, right there. We haven't gotten quite that far high yet today, but today we opened pretty even and mostly have been trading flat for most of the day. The markets, much of this market's bull market, this rally was boosted this week by the Fed pausing its hawkish interest rate stance on Wednesday when it refrained, as you know, from raising rates. Now, the SPY is definitely in an uptrend here. It has been for a little while. Do remember always that the definition of an uptrend is higher highs and higher lows. Like that, okay? And we're seeing that here, as here's a higher low, there's a higher low, okay? But notice the word low, please. Nothing in the stock market goes straight up forever. I can absolutely, totally promise you that. And while this is tons of fun, and hopefully it continues, although hope is not a strategy, but we do know that we're getting stretched pretty high here. We know the SPY is overbought. We've been watching the 14-day RSI as it is moved up and over the 70 line, and now the RSI, which you rarely see, to tell you the truth, you rarely see the RSI as overbought as it is now. It's over 70. It's actually at 74. You don't see it very often. So it means we're getting stretched pretty high. The S&P is trading at quite a premium to its 20, 50, and 200-day moving averages. And again, remember that an uptrend is a series of higher lows and higher highs. So that's all good, but we may need a pullback here. You can't keep going higher if you don't go lower a little bit. So I'm just kind of not negative, but certainly warning short-term traders that we could see a little softening here soon. Now, after making a low in March at about 380 back here, the SPY moved up and did return to February highs. The February highs were certainly bullish and made everyone happy. It did pull back here, went back up to February highs at 415, 416, so that was good to get above those. Then we had to wait out the debt ceiling negotiations. So price wandered up and down over the 20, the red line, over the 50, the green line, moving up and down, kind of at a consolidation here, moving up and over and kind of holding on to the 50-day for dear life. Then right in here, the debt ceiling negotiations were completed, the SPY really did pop out and up from the 20-day moving average and started climbing up to its present level. Now, please note with me that this angle up has become very, very steep. All right, that's important to note. So please don't be in a FOMO mood, right? Do not be in an FOMO mood, which is fear of missing out right now. Just keep an eye and remember to protect your capital all times. Price support we have it down here at 430. These highs here in this consolidation zone that was back a week or so ago. Then we have the 420 level right here, which was a level 420 to 423, which was resistance for a long time, is now potential price support. We've got the 50-day moving average coming in here at 417, and on down from there. So short-term traders will want to consider raising protective stops here to preserve profits. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our benchmark our benchmark NASDAQ 100 index. Very important, has the top 100 non-financial companies, of course, by market capitalization in the NASDAQ 100. We're thinking stocks here like Alphabet, Amazon, NVIDIA, AMD, Tesla, that whole group. Now, when I captured this chart today, the QQQ was trading at $370.24. Ever since its March lows here at 285, it's rallied and it's rallied up past its February highs here at 313. So it rallied up over that, then ripped right through those highs here to 320, 321, then consolidated and then started inching higher sooner than the debt ceiling negotiations. It kind of blew that whole thing off, walked up its 20-day moving average, then burst up really high when that was solved and moved up into a very steep uptrend. And most of this is on the back of beliefs about AI and what is the technology of it and the companies that will be involved in it in the future. The all-time high of the QQQ was in November of 2021 at $408.71, and that was about 9% higher than we are today. So kind of interesting. This is the closest we've been in a long time. Now, look down with me, please. That's all good news. Look down at the 14-day RSI. It's at 78. No, it's 79 now. I cannot remember the last time I've seen the RSI in an overbought zone of 79. This line here, the measurement line's at 70. So we are really stretched tight here. The QQQs, the tech stocks are really, really up high here. It's okay, but again, please know that the definition of an uptrend is higher highs and higher lows, okay? So we may hit a little bit of a soft spot here soon if traders start taking profits. Now we have support here, price support at 355 to 351. We do have the 351 here at the 20-day moving average. We've got the bottom here at 348, 349. Then we move on down here to 338, 332 for more. Lots of potential price support here. Here's the 50-day moving average coming in at 332, 333. So lots of potential support here. But again, we may see a little softening. Like the SPY, the Qs are in an awesome uptrend right now. But please do keep an eye, if you're a short-term trader, on your stops. Okay, our final chart for the day is a daily chart of the iShares U.S. Pharmaceuticals ETF, the IHE. The IHE has 42 top holdings, and the top holdings include Johnson & Johnson, Merck, Lilly, Pfizer, and Bristol Myers. Now, when I captured this chart today, the IHE was trading at $179.07. It is right now just under, as you can see, the 200-day moving average, which has come down overhead. It's sitting on top of its 50-day moving average, and that's coming in at 178.42. And down below here is the 20-day moving average at 175. Now, what I'm looking at, I always, before I get too involved in the near term here, I like to back up. I remember in the old days, I had a trading teacher, this is a long time ago, and in a trading room with a bunch of traders, he used to yell at us, back up, and look at the big picture. And that is always such a wise thing to do. So what I did here was, let's back up here and look. When we look at this chart today, we see three things that are nice and good. We see this low back here in October of 2022 at about $167. So it came down, hit that low, rallied hard, rallied up hard almost into the 200s, then came back down, retested the lows that we've had in this crazy market this year. This was 167. When it came back down, it held at 169. So what is that? You know how much I like higher lows. This means that there is support there. This means there is support. It means that buyers are coming in and not allowing it. They let it go down, but they didn't let it go all the way back down to its prior low back here in October. So it did come down for sure. Then it rallied up dramatically up here, kind of made wobbled all over the place on the screen here, like 179, 184, then came down. What I'm looking for is orderly here. I have to see orderly. So I'm looking at it here making a very kind of crazy, but nonetheless there, double top, shallow, but it made it. Crashed back down below the 200-day, the 50-day, then came back up and made a higher low here. And that's what I want to see. It made a higher low the end of May at $170. So we got 167, 169, and 170. I like that. And from the May 31st low, which was right here, the IHE has now rallied 5% off that low. But it looks like it's starting to get more orderly, and I do like orderly. So what I would actually like to see here is it would be okay with me, not that it matters to this stock, it would be okay with me if next week it pulled back a little bit. But if it doesn't, I'm going to scale in, so it's okay as long as it stays where I want. So we've got this low here, right here. The low under the 20-day is $174.47. Okay. I'd rather buy it down here than up here, but still, the way this thing moves, I'd hate to miss the move too. So I don't know. We'll have to see what happens. If in the coming week the IHE can stay above the 20-day moving average, and the 20-day is coming in now at $175.10, so just call it 175 if you want to. If in the coming week the IHE can stay above the 20-day moving average, I may add a small position to my portfolio of the IHE, and my stop is going to be down here at 170. This is 175 here. I'm going to put my stop down here at 174, okay? If and when the IHE rallies above the 200-day moving average, which is coming in at, call it 179.50, if it can move above that and stay above it for 3 days, 3 consecutive days, I will add to my position, and of course by then I'm going to be trailing my stop up a bit higher. So you may want to keep an eye on the IHE in the coming week. Now, if you'd like to learn how to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs like our popular flagship product, 7 Steps to Successful Trading. Plus, if you like to learn how to swing trade, this is a great swing trading market. If you would like to learn how to trend trade, it's also a good trend trading market. Or how to read charts, great for novices. 3 winning setups, great for short-term traders. How to bottom fish like a pro, that's what we're looking for now, is stocks that are down that are going to hopefully stay in uptrends for a while. There are many more trainings in these programs. So you will find out how to elevate your trading skill set and increase your gains quickly and easily, so go ahead and check them out. To see all of my online training courses, simply go to this link on the screen, or easier still, just click on the orange button below. Okay, you guys, until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.